This is the weekly review for the week of December 12th to December 16th, as well as this week's Sunday preparation. So, uh, coming into the week, I was anticipating a bearish week where I wanted price to trade up from the weekly opening price and come down into this daily order block. And that's what ended up playing out. I did actually end up getting a bit confused in the middle of the week because originally I wasn't anticipating previous week's high to be traded to, and FOMC didn't really give much displacement. The displacement came on Thursday. So at the end of Wednesday's trading, I was a little bit kind of confused if my bias was going to play out or not. Um, but it did end up doing that. And I should have remembered to give price some more leeway because we had two big high impact news events, the CPI and FOMC. So um, it would have been reasonable to expect price to trade up this high and take the buy side liquidity up here. So starting with Monday's trading, I was looking for longs because I wanted price to trade up from the weekly opening price to make the high of the week. We didn't get really any opportunities on Monday. I was initially looking at this bearish displacement down. It wasn't super clear displacement. We didn't close much below this low. And then we respected this fair value gap right here and had a SMT. So I was just watching that to see if we're going to be bearish, but this move down here didn't create any fair value gaps, and this was just a Judas swing on the 9:30 open, coming back down into this fair value gap, multiple time frame inefficiency, and we had a SMT with London low. So with all of those confluences, and then I saw price give this nice big displacement candle up, I was looking for longs and waiting for a nice break in market structure above this high here, but we never got that. We just got a wick break in market structure. So it wasn't any super clear displacement up, but I was just still annotating this live where I saw this fair value gap and discount of the range. And the only reason I didn't buy this was because we didn't have a clear break in market structure above here, but I was anticipating price to return down here and trade up, and that's exactly what ended up playing out. So everything was here except that break in market structure. If that break in market structure would have been there, this would have been a 100% clear long setup for me, and I would have set limits here. So then I saw after the RTO, we had a new SMT and this nice clean displacement upright. This was what I wanted to see here, and that type of break in market structure running away, and then a RTO. So for this institutional order flow entry drill, I set a limit here, but price never returned to discount, and we really just ended up trading higher with no entry opportunities. And we took this, or these equal highs and previous day's high. And then I noted that we had an SMT with previous day's high, so I wanted to see if that held into Tuesday's trading to see if this was maybe the high of the week. That obviously didn't end up playing out. So that was pretty much it for Monday. Then Tuesday was CPI, and there weren't any clear setups, and I ended up taking a loss for no reason because I shouldn't have been trading. Nothing set up prior to CPI. Then we had the news release. We gapped up, took all of this buy side here. Previous week's high, and then the initial high that the initial high of December that was set on December 1st, right? So we took that, and then on a lower time frame, H4 and below, we had a shift in market structure here. Shift in market structure, and it came back to premium. But I didn't take this because there wasn't any SMT with the initial December high or previous week's high. This monthly SMT I wasn't counting because we've had a monthly SMT with US 30 for a long time already, with the September high and the August high. So that's, yeah, the September high's back here. So we've had that monthly SMT with September high on US 30 for since the end of October, so for more than a month, and the August high for several weeks already. So I was looking for a SMT with either the initial December high, previous week's high, or some low time frame SMT here, and then maybe I would have been interested in shorting this, but we didn't get any SMT, so that's why I wasn't interested in this. I marked it out to see if it would play out, and it did. And we ended up retracing all the way down to take the initial CPI low. And I saw that we had a SMT with London low. So in the beginning, I was potentially looking for maybe a long setup up into this gap to offer buy side. So there was only sell side delivered here. And I was thinking that with this SMT and breaking market structure, we could deliver buy side into this gap. We did end up having a nice displacement up and a setup here, but the only thing is that this fair value gap wasn't in discount, so that's why I didn't take it. But I mean, theoretically, if you just bought at the mean threshold, it would have delivered 1.3R, but since there was no PD array overlapping with the mean threshold, that's why I didn't take it. But yeah, we went back up into the gap, and then we rated the lunch high and had displacement down with a very shallow SMT. And I ended up taking a short here. To be honest, I don't know why. I think that this was just like an impulse trade for some reason, because price just ended up consolidating the rest of the day. But yeah, I was looking at this displacement down and an RTO back up into this fair value gap in premium, but I shouldn't have taken this trade because it was on a CPI day and I got stopped out. So I noted that in my journal. So for Wednesday was FOMC, so I wasn't on the charts here. And we ended up taking the AM session high. And we had this US 30 SMT, which I noted when I was reviewing price action over the weekend, where US 30 had a mentorship set up on the higher time frame. So we took that initial December high and broke market structure here and came back up into this fair value gap where, right, so that's just the mentorship setup on H1, where S&P didn't do that. That's that same fair value gap, and also we didn't break market structure on S&P. So that's what this US 30 SMT is denoting. So we had basically a failure swing there, and FOMC still played out nicely where we RTO'd into the fair value gap and ended up trading down, but this isn't something obviously that would be tradable because this is like a 30 or 40 pip wide fair value gap, but it's still nice to see that price was respecting the PD arrays even on a FOMC day. So on Thursday, Wednesday night, because FOMC didn't give much displacement, and on the daily chart we were still in consolidation. So that's Wednesday's candle, right? Without seeing these two candles, I wasn't sure what price wanted to do because I thought FOMC was going to give a nice displacement in one direction or another that's going to give us the bias, because we've just been consolidating on the daily chart here. So on Wednesday night, I wasn't sure what I was going to do on Thursday. And then on Thursday, I saw that price had a very small Judas swing above the 12 a.m. open price, big displacement down, and then just this consolidation here with an inability to reach up into the fair value gaps up here, and then another leg of displacement down, and a second inability to trade above the 8:30 a.m. opening price, right? There was not a big Judas swing. So that's why I was anticipating at the 9:30 open that we weren't going to have a big Judas swing, and that we weren't going to trade back up into this multiple time frame inefficiency, and that this M5 fair value gap should hold price, given how weak price was since the 12 a.m. open. And that's what ended up playing out. We had this 2-minute fair value gap. The only thing was that it wasn't in it wasn't in premium, but we had a low time frame SMT here, displacement down back into the fair value gap, and ended up trading lower. So it was nice to see that, given the data from the London session and early New York session, that price was extremely heavy, and that's why I didn't anticipate a huge move up to take buy side, and why only these lower time frame PD arrays should hold price, which is what ended up happening. We couldn't get past this M5 fair value gap up here, and price ended up trading lower, taking Monday low, previous week's low. We had an institutional order full entry drill here, but it never came into a premium. The fair value gap wasn't in a premium. And down here at PM session, I was looking for a potential daily power 3 long trade. I didn't end up taking anything because I didn't see anything super clear. We had this very low time frame SMT with the 1 p.m. low and 1:45, 1:50 p.m. Candle. But again, there was no fair value gap in discount, or there was, but price never returned to it, right? This was the fair value gap it returned into, but that fair value gap wasn't in discount. So, but I still just noted in my journal that price returned to the mean threshold of the dealing range, and it hit 1.3R. But since there was no PD array to buy here, that's why I didn't do anything. So yeah. So moving on to Friday. Friday was the cleanest day of the week, in my opinion, because I saw that we made a low in London, an interim session here, and we hit the daily order block, this one right here. Um, and I was looking for a potential weekly power 3 trade. So low of the week made on Friday, price should potentially retrace back up into the weekly range. And on top of that, we had this low resistance liquidity run, fair value gap up here. And I was just watching price. We had a SMT with London low. This wasn't super significant to me because this wasn't a distinct low. We just had a very short-term low form in London, and then it immediately rolled over. But I still noted it in in confluence with the daily order block, and then I saw this 9:30 open displacement up, and with all of that context is why I ended up taking the long setup on this fair value gap here. And I got out at 1.3R, and that ended up being almost the high. So I don't know if that was lucky or not. I wasn't like aiming for any specific percentage closure of this fair value gap or anything. I would just put 1.3R like normal. Um, but yeah, it ended up hitting TP, and then it reversed with this displacement down. Now, when I was watching it live, I didn't see that we had this London high SMT. If I did, I would have set limits here. Um, but because I missed that, I was just watching this to see if it would play out, if price would retrace here into premium, into this fair value gap in premium. Um, but I didn't set a limit there because I didn't know exactly what price wanted to do, because I thought that this was going to be the low of the day. Um, because again of that weekly power 3 bias, and price ended up rolling over and trading lower. So back in the PM session, because we made a new low and I saw that we had this displacement up, I was looking for another weekly power 3 entry long, and price ended up giving it the setup, but we never returned into discount here. The fair value gap was right here just below the mean threshold, and price tapped it but never came down into this fair value gap. So it missed my limit here and traded back up into this multiple time frame inefficiency. So it was a nice day on Friday. In my opinion, it was the best day of the week. We had one setup here, and then these two swerves. But overall, it was pretty good. So coming into next week, price is, in my opinion, looking more and more bearish. Now that we broke this daily fair value gap. Now we are still tapping into this daily order block, so I want to see the reaction off of it. But if we end up breaking this daily order block, I think that's when we're going to come down for the October low here. So far, I pretty much just marked out this daily bearish fair value gap up here. It's also a multiple time frame inefficiency with H4 and H1 lows, or fair value gaps. Should clean this up a little bit. So we don't have any range on the daily, so I just marked out this H4 range, and there are these fair value gaps in premium, and then we also have some relative equal highs with Friday's high. And in terms of news, we have some high impact news Wednesday and Friday, and then medium impact on Thursday. I'm not sure if Friday is going to be tradable or not, because this is the Friday before the Christmas weekend. I'm still going to pay attention to the charts though, but there may not be much volume on Friday due to the holiday weekend. So just to note. Now, because there's no crazy CPI, FOMC, non-farm payroll numbers, I don't think that previous week's high all the way up here should be violated if we're going to go lower. That definitely doesn't make any sense. So pretty much what I'm going to be watching for is to see if there's a low time frame setup forming Tuesday, Wednesday up in this daily Fair Valley Gap. So I think Monday should maybe give us some type of long entry up into these equal highs or up into premium here. And then that'll set the high of the week on Tuesday or Wednesday. And then we'll end up trading lower. That's ideally what I think is going to happen. But I'm still going to be cognizant that we're in this daily order block, and maybe we just have some crazy bullish reaction off of it, and we're actually not bearish. So just keep that in mind. But I'm still leaning bearish, given the fact that we're in premium of this weekly range. We rated this high monthly SMT, and we're starting to break or violate bullish PD arrays like this Fair Valley Gap, this order block here. So I'm leaning bearish, but I'm going to just remember that we're still trading in this daily bullish order block. But if this breaks, then I think it's pretty clear that we're going to come for this low. So yeah, that's my thoughts, and we'll see what ends up happening this week.